Ladies and gentlemen, good day and welcome to Kansai Nerolac Q1 FY23 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities Limited. Thank you and over to you, Mr. Joshi.
Yeah, thanks Nirav. On behalf of ICICI Securities, we welcome you all to Q1 FY23 results conference call of Kansai Nerolac Paints Limited. From the management side, we have with us today Mr. Anuj Jain, Managing Director, Mr. Prashant Pai, Director Finance, and Mr. Jason Gonsalves, Director Corporate Planning, IT and Materials. Now I hand over the call to the management for the initial comments on the quarterly performance, and then we will open the floor for question and answers. Thanks and over to you, sir.
Thank you so much. Good morning and namaskar to everyone. Greetings for good days. Thanks for joining this call of Kansai Nerolac for Q1 of financial year 22-23. As you would have seen during first quarter, we recorded top line growth of 47.1%. Industrial growth is slightly higher than decorative growth. Inflationary trend continued with 7% further inflation what we have seen in Q1. And in Q1 we have taken approximately 2% price increase. Just to give you some update, last conference we spoke about what actions we are doing or taking in industrial and decorative. So I'm just taking a privilege to give you update on those points as of now, that how we progress, what actions we have taken, where we are. So in industrial we said that last year also we had an increase in market share and that trend continues. And our challenge is basically to ensure better margins. And therefore, in addition to the efforts for price increase, like last year we have taken approximately 18% price increase. What actions we are doing, because that increase was not sufficient to mitigate the inflation, because inflation was very high. So what other actions we are taking? So we have been extending technologically superior product. Some product we mentioned last time like monocoats, medium to high solids. And in addition now we have expanded our range of tin-free and energy efficient products. These are very high technology products which really helps customer in terms of their capex goes down and energy efficient, so therefore the consumption of the energy goes down. So it is environment friendly and also it helps in terms of reducing the cost and increasing the productivity of the customer front. And so we are expanding and our salience has gone up in the Q1 because we are trying that how much we can shift to these products where there is advantage and maybe slightly the margin is also better. In performance coatings, where the again the margins were very low, and we said last time that we are increasing our focus towards high technology products where the margins are better. So what we have done in the first quarter is that there were a lot of low end business where the margins were not there, hardly margin. So we exited approximately 10% of the business we exited, and we shifted our focus to the premium item, technology items in high performance coating, and where the salience has gone up in the first quarter. In coil coatings again, there have been a lot of margin pressures, and we were virtually selling at a very low margin or hardly any margin. So there also we said that we'll move towards higher margin technology products and appliance business, because we were only in the sheet business, so we were saying that appliance business. So there, in fact, we have left almost 30% of our business which was not profitable. And in appliance and the high technology, we started getting the approvals, and our salience in the first quarter has gone up from 3% to almost 10% in coil coating. In powder coating also, where we have a good market share, we are market leader, but in the premium our market share is less. So we said that we'll increase our salience in the premium. So in the first quarter our salience has gone up by 2%. It is not in line with what we have targeted, but still the trend is upward. So this is in case of industrial. In decorative, last time we discussed that what we are doing. So one action was related to a new brand expression which was Paint Plus, where we said that we'll be launching differentiated products. So in the first quarter, mica marble stretch and sheen, we expanded So we launched it in the fourth quarter of last year, but we expanded in the market. Now it is available all India. We introduced Nerolac Impression Kashmir in the first quarter, and polyurethane enamel also was introduced. Second point, we said we'll add more and more products every quarter in premium and super premium category, and we'll increase the because our market share is better relatively in economy and popular category, but we are weak in premium. So we said within our network, because we have a strength of network and we have a relationship with our network. So from our network, we'll attempt to increase our sale. So with the introduction of these new products in last 2 quarters, our distribution growth for the super premium category is more than 50% in the quarter one, and salience also has gone up. In terms of communication, we were saying that we'll increase communication through advertising and digital marketing focus, and we'll focus on Paint Plus, which is the differentiation, and Japanese technology and jingle, which is very popular. And in terms of our share of voice, we'll keep it around 15% approximately, and we'll participate in maybe cricket again. So in the first quarter, we introduced campaign on Paint Plus with Japanese technology and jingle. So that has been on air in the first quarter, and our share of voice in the first quarter was little higher than 15%. Another point was augmenting the market development structure to generate leads from sites and influencers. So in first quarter, we scaled up field team. Most of the time has gone into recruitment, but we have scaled up. Actually, we have doubled our team, and also the support system. And we also started digital marketing program for lead generation towards the end of quarter one. The other point was that we want to do some good influencer program with acceptance of Pragati app, which we introduced for painters, that offers instant benefit, which is the fastest in the industry. So in the first quarter, we have seen a higher double-digit growth in the increase in the participation of painters, but we still have a gap in terms of getting share of wallet from the painter. But participation has increased. We also wanted to start tracking the secondary sale from the dealer counter. We started, but we'll have to bring it to a meaningful conclusion. In distribution, we had increased our team to open the direct distribution, dedicated team for opening the distribution, and some new distribution models. So in first quarter, our distribution growth is again in high double digit, and we have put 50 preferred counters. So these are like a kind of experienced stores, but with the existing dealers. So 50 counters are in place. We were weak in institutional business, project business, and last 2-3 years, this business was growing at the faster rate. So we said that we'll focus on institutional business by increasing the reach. So we expanded our reach in the metros and tier 1 towns, and expanded our team there. And in the quarter one, we doubled our business in the project institutional business. The next part was new business, which includes construction chemical, woods, mainly in our case, because adhesives we do through Nerolac, which is our subsidiary, so joint venture and subsidiary. And we said that we want to achieve a salience of greater than 5%. Industry salience is higher, but since we started late, we said first milestone is that we should achieve 5%. In the quarter one, we have touched the salience of 5%. And obviously, our first attempt was not to create any differentiation here, but since we started late, let us match the range of the market and see that how much we can sell to our existing counters. So as of now, approximately 30% of our existing counters have started selling our construction chemical. So obviously, we have to go forward, but as of now, this is the status. the indicators are in our right direction. So we need to improve in terms of speed to scale up and also sustaining momentum of some of the launches, innovations, what we are doing. This is internally what we feel that we need to scale it up. In terms of profit financials, you all have seen the result. The profit after tax was up by 37%. So this is the initial commentary from my side. Thanks a lot for your patience hearing. And now I invite the questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Dhruv from Edelweiss. Please go ahead. Dhruv, we can't hear you.
Hello.
Yes.
Can you hear me?
Yes.
Yeah.
Yes.
Just a couple of questions. One is on the revenue mix. Can you take us through the mix which we have seen historically between industrial and decorative, and within industrial, what has been the mix of auto and non-auto, and what is the current mix, and where do you see 3 years ahead, given the growth uptick you see in the auto sector, basically? That's my first question.
Okay. So mix is generally we have been saying around 55-45, 55 for decorative and 45 for auto, and within that it is about 70-30, auto and non-auto. And going forward 3 years, obviously our plan is, but today the opportunity is there in both the markets, decorative and industrial. So though the intention is that it goes in favor of decorative, the salience should continue to go up, but it depends that how market behave in next 3 years time, because since we are strong in industrial part also, if there is opportunity available, we would not like to lose up on that.
Thanks. And second is, can you take us through the market share in both the segments?
See, market share is very difficult, because generally what happens is that it depends that how many companies you consider. But in decorative, if we take only the listed companies, the market share is around 9 to 10%. And in automotive, we have a market share in excess of 50%. For the non-auto, it's very difficult because there are so many companies and there are so many segments. So segment by segment, you have to look at. So therefore, there it is very difficult to get into the market share.
No, that I understand. Thanks. This is all.
Thank you.
Thank you. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah, hi Anuj, Prashant.
Hi.
Good morning. Thanks for the opportunity.
Good morning.
Just two questions. Did you spell out what is the volume growth in the decorative segment in the beginning? I mean, I missed that number.
No, I didn't spell out. So overall volume growth was higher double digit.
So when you say 18%, you have taken price increases. So it should be in the range of about 20 odd to 22%.
Yeah, more than 20% you can say.
Okay, that's really helpful. Second, you mentioned that you have taken 2% price increase, and you mentioned that the inflation is in the highs of 8% in the quarter.
7%. Yes.
That's correct?
Yeah, 7% inflation in the quarter one, and we have taken 2% price increase.
So my question is that since the all data points suggest that the crude is going to be slowing down and there are a lot of benefits which are going to come. So I just wanted to understand, how are you running the supply chain? Is that right now we are using this high price inventory and that's why you've taken 2%, or do you think you will have to take some more price increase for the products in the decorative?
So this price is something very recent phenomena towards the end of quarter, and generally there is a lag, because that change in the crude should reflect in the derivatives, and thereafter obviously we carry some inventory, so there is a lag period. Having said that, when we are looking at the inflation, we are looking at in totality. Say last year there was high inflation, first quarter also there is inflation. and especially in industrial, whatever price increase we have taken last year, it was less in comparison to the inflation. So obviously more price increase would be required. In decorative, again, there may be some possibility of further price increase, small price increase, and then probably next 2-3 months when the picture would be clear, then we'll be able to see whether further is required or not required, but there is a possibility of further price increase as of now.
Okay, wonderful. On the industrial and auto, have you experienced any price increases we have got?
So when I said, see, last year we have taken in industrial about 18%, and when I say 2% price increase Q1, that is total. It includes industrial decorative, and price increase is relatively higher in industrial.
Okay, that's helpful. My last question that you did allude saying a lot of initiatives you have taken, but just for the sake of monitoring, what are the top 2 or 3 things, because I'm sure you have done the strategy for next 3 years. What are the top 2-3 things you would like to achieve in say next 2-3 years?
So if you are talking about the initiatives, you are talking about the initiatives or what?
Yeah, initiatives.
So I think I spelled out, one is that business part, because in business there are 3 things: paint, putty, and new businesses. So obviously our first attempt is to see that in paint, that we are matching or better than the market growth, and for that the initiatives in terms of product, communication, and influencer. So that's the first priority. And putty will be waiting, whenever the right time, how we can increase the discount and match up the growth. And new businesses, as I said, that we'll be launching the product, but we are not looking at 100%. So the first priority is to get to the market and over the market in paint based on the initiatives of product, communication, and influencer.
So does this have the implication that you have any target that say certain percentage of the new product should contribute to your revenue?
Yes. For the new products, for the participation increase in painters, the extraction from the painters, those targets we have, and we are monitoring on a month-on-month basis.
Okay. That's really helpful. Thank you, Anuj, and all the best.
Thank you so much.
Thank you. The next question is from the line of Mihir from Nomura. Please go ahead.
Hi, sir. Good morning. Thank you for taking my question, and congrats on a good set of numbers. Mr. Jain, I just wanted to check with you, on the quarter, was there any restocking at the dealer end? As 4Q, we had seen relatively lower sales, so the dealers would have ideally have to, stock up in the first quarter. So any kind of a one-off or a restocking that is there in the numbers in the first quarter sales?
No. So what happens that when they stock less in the last quarter, generally the pickup happen in the first month of the quarter, which is April. But during the quarter, it gets stabilized.
Okay. So we are like normalized sales. So the run rate is normalized to these levels is what can be assumed. Yes. Got it. So secondly, I wanted to check, you mentioned, the mix had improved. So the volume growth should be much higher than 28-30% in my view, right? I mean, and what is the steady state mix impact that we should consider?
Steady state mix, so, in our mix, as I said earlier also, that what we are looking at this premium, super premium category, and what we are watching is that they are, because the growth in the market is better. Today also, after the inflation, we are seeing that in the premium category, as of now, market is still doing good, and maybe the impact is there on the
revisit that answer that you said on the pricing. If I look at current input cost levels, would you say that the incremental price hike, not just in decorative but also in industrial, will be relatively low? The amount required will be much lower than what has already been taken, as in the bulk of the price hikes are now behind us?
In industrial, we feel that we need more price increase. Because last year inflation was there, and I think we got maybe just 40-50% of that, 50% of the price increase, of the inflation. So some more price increase definitely is required, for us to better our margins.
Okay, sir. Okay. And sir, lastly, you did allude towards a focus on more premium, more technology-based products, not just in decorative, but also in our industrial portfolio. Does that have any impact on the royalty rate that we pay?
No impact.
So the royalty is essentially paid only on the products that are directly taken from, only in the industrial side, right, sir? I just wanted to clarify that part.
It's only on automotive on selected products.
Perfect, sir. That's all from my side. Thank you very much, sir. Thank you.
Thank you. Next question is from the line of Aditya Aluwalia from Invesco. Please go ahead.
Yeah, hi. Thank you for the opportunity.
Thank you.
My first question is on A&P spends, and from a longer term perspective, do you think that we have been a little cautious and we have not spent enough, and that is one of the reasons why performance in the past has been a little bit below peers? And secondly, what is the outlook on the A&P spends going ahead?
So, we do agree that last few years that we reduced our expenditure and we got impacted because of that. And now we have taken a conscious call that we'll be increasing our marketing expenditure.
So as a percentage of sales, is there anything that we're calling out?
So I don't want to share the figure, but as I said that, if you see last 2-3 years when we reduced our marketing expenditure, our share of voice in terms of visibility has gone down substantially, significantly. Now we are saying maybe around 14-15% share of voice at least will be maintaining, even if the market intensity change, which means that if market intensity goes up because when the new competition is there, so you'll maintain. So if the market intensity goes up, this figure also will go up.
Right. But the margins have come off despite this lower A&P, I think because of the industrial and auto segment. So you think that even with the higher A&P, the recovery, as you mentioned in the previous question, there should be continuous improvement in margins going forward?
Yeah, because as we discussed about this premium, super premium, the paint plus products, and that's why the focus is more there. That because when we are going to increase our A&P expenditure and there are certain other initiatives required, so we have to focus on the better mix so that we are able to balance it out.
Thank you. And just one last one. You said 55-45, the mix between decorative and auto and industrial?
Yes.
But yes. It should be more like 65-35 now, right? Given that auto has been declining and.
No. 55-35, 55-45, closer to that.
55 and 45. Okay. Thank you very much.
Thank you. Next question is from the line of KU from ICICI Prudential. Please go ahead.
Thanks for the opportunity. Just want to understand that in the context of, say, as you mentioned that we exited some of the low margin businesses on the industrial side. At the same time, we are witnessing, say, some slowdown in the input prices also. So these two inputs logically says that there should be a sequential margin improvement on the industrial side. And since we exited some of the business, so how should we see a balance between the growth in the industrial side and the margins going ahead? Any run rate range or any qualitative color you would like to share on that aspect?
Two parts. One, that growth obviously in industrial automotive side, there is a momentum in the growth. The production growth is looking up. Two-wheelers, where the last year production growth of two-wheeler manufacturers were negative, now it is into the positive area, but it's still not back to the pre-COVID level. But with the good monsoon, there may be a possibility that after September, there may be a further pickup of two-wheeler. But we do see a good momentum to continue for the automotive demand. For margins, as we discussed earlier, also because margins have gone so low, and obviously therefore there is an intent requirement to increase the margin, for which one is the pricing, the other some of the initiatives which I mentioned. Those initiatives are taken to get it to a reasonable level. Margins to be improved, but as a strategy, what is happening in the market, some of the investments are also required. So as we keep working on our margin improvement and then see that when it become more viable to do more initiative, so it will be a mix and match of both the things.
Okay, but when you exited the businesses, some of the businesses, that won't have impact on the growth or earnings growth since they were not profitable.
We are going a little conscious on that, in terms of if you are saying top line growth, obviously when you exit some business, there will be some impact. But the focus is shifted from that low profitable product to the better profitable product. So over a period of time, we intend to compensate that. So that is what we are doing.
Okay. Sir, congratulations on good results and thanks a lot and all the best for the future. Thank you.
Thank you for your compliments.
Thank you. Next question is from the line of Arun Subramanian from Ampersand Capital. Please go ahead.
Yeah. Hi, sir. Congratulations once again for a good recovery in quarter one. So one thing just wanted to get clarification from you is that you said you are more present in smaller towns than in tier 1, and that has kind of affected your market share trend in recent times. So can you just give us a more granular sense of how is your split, and secondly, what exactly you are looking forward to in terms of the change in next couple of years?
Just to give you some rough example, like, if you see local towns versus upcountry town. When I say local town, wherever we have the depot office, they are mostly the A-class town. Our business would be little less than 40% from the local towns and more than 60% from the upcountry towns. While in terms of market split, it would be 50-50 or maybe more tilted towards the local towns. So to that extent, we have a disadvantage. And all these big towns, some of the things what I mentioned in terms of service and other initiative project, because project business, institutional business is growing more in this local towns or the bigger towns. So some of these initiatives over a period of 2 years should help us.
Understood. And considering that you are launching your products on a more premium side, so that typically should be used up in bigger towns. So is your product strategy aligned to what you are looking at?
Yes, it is aligned because there are two things. One, that premium, super premium category, but some of the differentiated products, the features what we are launching, we are trying to see that pricing is relatively affordable. I'm just saying that if the same feature is available, so that's a democratization of the product. That is the same feature is available in the market at 100 rupees, whether you can make it available at 90 rupees. And that's a technology, working which we are doing without impacting the margin. But how do you formulate the product where that feature can be offered? So some of these products goes very well in the urban markets or say local market, but some of these products are also quite aligned, with the requirement of the upcountry markets.
Understood. So as I can see that your strategy as far as industrial is pretty clear and you're doing pretty okay out there except for this pricing volatility.
in many markets. So we have an advantage in terms of getting access to that what kind of product, even in the adjacent categories, that what kind of trends. So those inputs are there, and through the Kansai in Japan or through their subsidiaries, we are able to get the access to the know-how, technology, product trends, marketing trends.
Understood. Thanks a lot, sir, and all the best.
Thank you.
Thank you. Next question is from the line of Ajay Thakur from Anand Rathi. Please go ahead.
Hi, sir. I had a few questions. First was, can you just elaborate on your distribution reach in the decorative paint segment? What would be your distribution reach? And how much distribution touch points you would have added, say, in the last quarter and last year, maybe?
So last year, our reach was around 27 to 28,000 total dealers when we ended the year. And generally, the growth in last 2-3 years has been, last year probably it was around 7-8%. In the COVID year, the growth was very less. And in the quarter one, the distribution has increased in the double digit, little higher double digit. So there's an improvement there.
Okay. And you continue with the same pace of distribution addition, like around 7 to 8% or around 10%, or you think there's much more headroom to grow, given the fact that leader is present more like in 1 lakh plus kind of outlet?
We have a good opportunity available, good headroom. As of now, the numbers have gone up, and some of the activities, because typically what happens is that you have to create demand and confidence in the trade, and as it goes up, then your numbers of the distribution. So that's like outcome. So all the activities, the product, influencer activities, what I spoke about, as we get success in that, I think our momentum in terms of increasing our reach will go up, should go up.
Okay. Secondly was wanting to check on the competition front. Can you just give us some brief color on how the competition is actually shaping, given the fact that we have new players coming in? Also, where are this competition more kind of concentrated? Is it some kind of a geographical region where we are seeing more competition from these players, or is it like they are broad based across India, that we are seeing that new player where the competition actually has erupted?
So companies who have already entered in last 2-3 years, they have already have had now having a presence across the country. Some of the companies who have entered in last few years, and specifically if you talk about Grasim, who is going to enter in next 1-2 years, I think their plan, whatever is available in the public domain, they are also planning to be all India player. But it may start with some specific market, and over a period of time, I think they will become an all India player.
Okay. And lastly, on the industry growth in the paint segment, any colors for this quarter, how it would be, given that we have very high number actually coming from most of the players. So any sense or color on that front could help.
Sorry, I didn't understand the question. Industry growth, you are saying?
About industry growth in terms of the paint segment for both the industrial paints and the decorative paint segment.
For quarter one, you are saying?
Yes, for Q1.
So because many of the companies are yet to come out with the results, so as of now we would not like to comment on that. Only once the results are out, then probably we'll have a better understanding.
Okay, quite helpful. Thanks, sir.
Thank you.
Thank you. Next question is from the line of Ankit Sethi from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. My first question is on the project business. So this was not a focus for some of the players earlier, say 4 to 5 years back, but now even the market leader and you have been seeing strong traction in it. So can you discuss the changes in terms of attractiveness of that business for you to focus more on it?
So in the past we were not very focused, because how many directions you want to go and how do you spread your the wings. But I think today the growth in certain market and the project business, because it's penetrating in more and more cities, the number of cities are getting expanded. So virtually I can say there's no choice. It is important to remain in this particular business. The discount in this business is higher, and therefore the margins are lower. The only thing is that this business is more of emulsions and putty, probably enamel distemper is not much there. So to that extent, some mixed advantage, but overall the margins are lower in the project business.
Okay, got it. Second, on a broad basis, what would be the margin difference between your deco and industrial segments? And the bridging, between the two will be more price-led, which you were alluding, sometime before, or will be done through more of new launches in the industrial segment?
Prashant, you want to answer this question?
So the difference at EBITDA level is in the range of is 7 to 8%, more than that, actually difference between decorative and industrial. And the improvement in margins will happen from introduction of new products and technologically superior products.
And also the price increase.
And price increase.
The difference is quite large now in decorative and industrial. And so these are few of the actions, which will probably see that whatever amount can be bridged, 100% it cannot be bridged.
Understood. And lastly, if you can highlight the capacity utilization for the two segments and what would be your capex requirements. That's it. Thank you.
65% was the capacity utilization in the Q1, and we announced some capacity expansion just to support the growth objectives what we have.
How should we model the capex for the next 2 years?
Prashant?
So right now you must have seen we have actually approved 2 projects, both in decorative. For industrial and automotive, we have capacity for the next 2-3 years. So as and when required, we'll definitely expand because we have got infrastructure for brownfield expansion both for industrial production. So that is not a concern at all. And as far as decorative is concerned, the commissioning is not as large as industrial, so we'll be able to scale up at any point of time. So there's no problem on capacity.
These 2 new projects what we have announced will happen over a period of next 25 to 30 months. And that's an investment of how much, Prashant?
290 crores.
290 crores what we have announced. So 290 crores plus your regular capex for the year.
Okay, fine. Got it, sir. Thank you so much. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Farsi Pantaki from IFL. Please go ahead.
Hi, sir. Congrats on a good set of numbers. Just trying to understand your margins. So this quarter has been a significant jump from 7% in Q4 to about 13% in Q1. And large part of it is because of the operating leverage of the higher QOQ sales. There is also some amount of improvement in gross margin, but our gross margins are still significantly below historic average. So just looking into the future for a few quarters, how do we sort of build in the margins, assuming that the input costs stay where they are? You already got some benefit from premiumization. You already taken price increases. Maybe a little more will come in the auto segment. So shall we say that this 13% margin will now stabilize in the range of about 14 to 15 unless the input costs fall further? Is that a fair assessment?
Overall year basis and the quarter basis there is a difference, because every quarter there is a change in the business mix and the product mix. As I just mentioned little while back that in the coming quarter for the paint industry the mix is supposed to be inferior, because it is more towards enamel distemper. So that also will affect. And also as I said that some of the activities what we are working upon that this will help in the margin improvement. But we do have some of the points which are pending in our strategy where, as I said, in some of the areas where we are still restricting, because as of now when you want to get a profitable growth you have to balance it out. So as we improve margin certain that our margins are already on the lower side. So I think we have improved, we will continue to improve, but improvement and investment will go hand in hand to see that we are able to balance between the top line and the bottom line.
So as you mentioned, there is a seasonality because of product mix being different. So if I basically look at this point of product mix difference between quarter to quarter, Q1 margins versus the full year margins, they would be higher or lower in a normal year?
Actually, I don't want to talk about that, but as I said that I think we have improved, we will improve, but then there are certain expenditure, investment also would be required. So I leave it to your guess, but maybe closer to this.
Sir, I'm not asking for guidance for this year or next year. I'm just saying in the past, historically speaking, the product mix impact has been sort of highest in which quarter, in terms of which quarter has the best product mix and which quarter has the worst product mix? That's all I want to know.
So the product mix is better in Q1 and Q3.
Okay, okay. Understood, sir. That's all from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Archit Joshi from B&K Securities. Please go ahead.
Thank you, sir, and congrats on a good set of numbers. Sir, my question is related to the industrial paint segment. You had mentioned in the presentation last quarter that the KNPL is a key player in the electric vehicle segment, and you've also mentioned that we have strategized a 3-year plan in terms of having a strategy built around the paints division that we have on the industrial side. So can you elaborate a bit more on what the strategy is and how we will be able to leverage our parents' products in the EV side? So any broad color on that would be helpful. Thank you.
By and large, what we said is like now since there is a trend of electrical vehicles, as of now the percentage is very low, but over a period of time, this percentage will increase. So the product, the system, what is required is available with us. And most of the customers who are, because in the electrical vehicles now, there are existing players who are, in the traditional two-wheeler business where they have their paint shop, but the new players are getting it painting, outside. So those are like ancillaries, and they are also our customers. So our customer base is good. The product is readily available. So as and when this scale-up happens, that we are there, we are available with our service, with our product like that. So this is related to EV if your question is only specific to electrical vehicles.
Yeah, sir, not just EV, but if you can elaborate a bit more and on what we actually are strategizing with respect to growing on the industry side, if you can.
Yeah. So industrial, because our this automotive market share is high, and there in fact, we have a very strong market share in Japanese players, and today there is a good growth happening in the Indian players also, the PV manufacturers. So there we are going aggressive, and we are working on the technology. That there was a question earlier, the help from our parents. So there are a lot of technology advantage, which we have in this industry, which is like, for example, in 2008 we introduced 3-coat 1-bake. Now, for the baking also there is a particular temperature. Now we are working on keep reducing the temperature so that the energy consumption keep going down at the customer end. That helps in terms of cost, that helps in terms of environment, that also helps in terms of increasing the productivity. So all those areas we are working to keep our moat or competitive advantage in the automotive. The second part is auto refinish, where our market share is very low, less than 5%. The size of the market is good, and there, the margins are better. So we are working to see that, how do we increase our salience of auto refinish, because that will also help us increasing the margin in the auto. And the non-industrial areas, as I said, that our focus is completely shifting, not completely, but largely shifting from the low end to the high end. And therefore we have created our structure and getting into the approvals, and fortunately we are getting good approvals. So these are the actions so that that we are able to make our good place in the areas which are growing and which are profitably growing.
Understood, sir. Thanks.
Thank you.
All the best.
Thank you.
Thank you. Next question is from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on a good set of numbers.
Thank you.
First question on the A&P spends. A few years ago we increased our A&P spends, say in FY18-19, saying that first you increase the mind share and then you convert the mind share to market share, which we weren't able to do in FY21-22. Now that you want to know you will increase your A&P spends again, what would be the strategy going forward in dealer network? Because the largest player, I think they have doubled, or at least they've increased their retail touch points. That might not exactly be dealers, but they've increased it by 50%. And next 2 years, say we increase our A&P spends, and by then Grasim would have entered the market in decorative. So what would be our strategy going forward in distribution and specifically the dealer network?
So in those years when we increase our marketing expenditure, our focus was more in terms of enhancing the mind share. and we got advantage. I think 3 years we gained market share in that period. And when you are saying that converting the mind share to the market share, that opportunity happens from the dealers and the influencers. So I think most of the activities, what we are talking about, the marketing activities, the influencer activities in that particular direction. So one side you have to maintain your salience. That's why we are not talking very aggressive in terms of share of voice. Maintain share of voice so that you are able to maintain your mind share, which is strong number 2 as of now, and concentrate on the activities that basically convert the mind share to the business, to the market share. So that is first part. When you talk about the new competition, I think it's because generally what happens in this market, ultimately for good business you have to create a good distribution and you have to create a good demand, for which important is that you should have a brand, which we have, and then you have to create the distribution and support the distribution with the painter, and that's a hard activities which people will have to do. So I think we have an advantage there that when even any new company comes in, I think they have to do this activity to build the distribution and to build the contacts with the influencer. It takes its own time. So by that particular time, how much work we are doing, how do we expand, I think that would be more, we will be more focused on that how do we speed up all these things and get the advantage.
My concern was on the growth rate. Say the Asian Paints is growing at 20-25% CAGR in its retail touch point, but we are guiding for 7-8% or early double digits. So I see this divergence. So is that something to be worried about, or we'll change that going forward?
But it's that's what I'm saying, that earlier, probably in the earlier years, it was very simple because paint versus paint. Now it is not paint. There's so many things which are getting added. There's so many businesses. So, I don't think, because ultimately we have to work in, see that, how our home is rather of, that just chasing. So there would be many products which probably fits into their strategy, but does not fit into our strategy. So as I said earlier, that focus remain on the paint and the integral part of the paint. So that is what we would be seeing. And over a period of time, then if there are some other products where the market is created, because typically in any industry it happens that, if there are new categories coming in, so leader takes the initiative and they create the market, and if their market is lucrative, maybe one can decide whether you want to participate. But at this stage, I think it is focus for us to see that in the paint area, which has been our core business, and whatever weaknesses we have had in the past, we come out of it. That is our focus area.
Okay, sir. Thank you. And second on capital allocation. So you said that our util is at 65% and we are putting up capex in decorators, which will take 24 to 30 months. That's also the time Grasim will take to come to the market. So there will be a lot of supply coming in the decorative space. So wouldn't it make sense for us to get aggressive in industrial space and put up new capex there rather than where there is a lot of competition coming in? Just wanted your thoughts on that.
So industrial, in fact, we have already created a capacity in Saika, and there is a lot of scope expansion is there. And as and when whatever demand we are able to foresee, I think we are covered in terms of the capacity. We are fully covered up because that's our one core area, and we are fully covered up. In fact, in last 2 years, we have created a dedicated capacity for non-industrial, non-automotive industrial things also. So we are fully covered up there. And this capacity, what we are adding is mainly in the water base, because water base, generally the market growth also is double digit, if you see last 3 years, 4 years, and that will continue. So, even if you see the normal growth rate, so obviously we do this calculation when you want to expand your capacity, that what is the normal growth rate, what can go plus minus, and then, based on that calculation, we feel that the capacity is required. And as I said that, we are committed to this decorative business also based on whatever initiatives we are taking, and as the time demands, probably, whatever changes are required to be, done in that, and therefore to support that, this capacity expansion is required.
Okay. And given the competition in decoratives, are we seeing higher aggression from, say, players who are in industrial like Axo or Berger getting aggressive in industrial space, or?
Difficult to comment upon, maybe possible, but I think industrial is a core business, and some of the things that I spoke about, I think we are also planning to go, you can say aggressive, because there are opportunities in the non-automotive area where I said that this segment by segment. The only thing is that yes, we want to remain focused on the profitable segment rather of the lower profitable segment, because in the decorative market, when the competition intensity goes up, there may be a possibility that the margin structure may change, and that time that if we are able to build our business in the industrial in the better profitable segment, I think we'll be able to balance it out.
Okay, so that's it from my side. Thanks a lot.
Thank you. Thank you.
Thank you very much. Ladies and gentlemen, the next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Hi, thank you.
Hi, am I audible? Hello?
Yes.
Okay. Hi, thank you. My first question is, Kansai Japan, in their presentation, in the month of May, have given a guidance of 18% growth for the India business, revenue growth. And if I were to look at this quarter's performance and based on, assume certain growth for the rest of the year, it seems that we should be able to grow 20% plus in revenue terms. So can you please help us understand, what goes into the guidance and forecast of the parent when they guide for the India business?
Krishnan, do you want to answer this question?
See, generally we don't give any guidance going forward. We don't make any forward-looking statements. So generally, you are a better person to judge how the industry is moving, right? And the growth is happening. We believe the growth going forward, growth is good, but we will not make any statement of any percentage increase or something. So we will move in line or slightly better than the paint industry. That's what I can say.
No. My question was, when Kansai Japan in their presentations gives a guidance for India business, is that the sort of target that the board sets for you? Is that the guidance that you give to the parent and they disclose it to their investors? Because I feel there is a disconnect, right? If the parent is giving a guidance for India business, then there should be some disclosure by the India entity also for India-based investors, or at least some explanation whether that is constant currency guidance or whether there is Japanese currency guidance.
So basically what happens, we have this system of having midterm plan, 3-year midterm plan, which we internally, have with Kansai Paint Japan. And those numbers have been given to them, basis which they have given the guidance. But, that was done some time back, because after that some price increase also happened post that. So which were not...
so if your question is that, what goes behind that, it's like internally we have a system of midterm plan. And from there they take those things.
That's helpful. But is it local currency or is it in Japanese currency? Do they make currency adjustment or it will be local currency growth?
It's adjusted in the Japanese currency.
Okay, so there is another element of currency assumptions that are done by them based on the numbers they receive from you. Okay. That is helpful.
You have asked a very different question.
Sorry, I asked a very
different question.
Okay, understood. All right. Second question is, last year, most of the year, industrial, at least base quarter industrial was very weak, and the mix was ballpark 60-40 or maybe 61-41 or 39. And this time, if it is 55-45, so the basic sort of calculation tells me that decorative business growth would be somewhere in the range of 35% YOY, and industrial would have grown at 60% YOY in this quarter. Is that understanding correct?
No. So basically 55-45 was the mix even the last year. 1%, 2% here or there. Generally we maintain that 55-45, and that's the mix for the last year. And the growth of total growth is around 47%. Industrial is slightly higher. Decorative also is more than 40%.
Understood. Helpful. The final question is on margins. In FY20, in the first half before pandemic, your overall EBITDA margin was in the range of 17-18%. And right now in this quarter, we are at 13. Based on your earlier comment that the gap between decorative and industrial is about 800 basis points, some of the back of the envelope calculation suggests that your decorative business EBITDA margin would not be more than 300 basis points lower than where you were, in a normalized RM environment 3 years back. So is that understanding correct, that bulk of the margin improvement from here on, is contingent on recovery in industrial coatings, and industrial coatings could be probably 800-900 basis points lower in terms of EBITDA margin versus what you were doing in FY20? Is that the right math and understanding, ballpark?
So I'll not comment on the mathematics what you use, but understanding is correct. that maybe in the decorative margin recovery to the level of pre-COVID level is good, and industrial there is a gap. So in the future, the recovery is dependent on the industrial. That understanding, you are right.
And reasonable to assume that decorative margins, your performance may be better, if not comparable, than the peers. And that this is partly because you've leveraged A&P lever more, and given there was more room also to leverage that. And when I look at your FY22 A&P spends at 3.6% of sales versus 5% in FY20. So I'm assuming that your decorative gross EBITDA margin performance will be better than the peers, right? Better than industry.
Or closer, but yes, it's better. Two things. One is this, the other is the mix. Our mix, we believe our mix is better. So yes, you are close to, is right, I don't know, but yes, somewhere you are right.
That is very helpful. Thank you so much.
Thank you.
That's it from my side.
Thank you. Next question is from the line of KU from ICICI Prudential. Please go ahead.
Thanks for the opportunity again. Sir, just want to understand that in context of our guidance of growing paint business at least in line or faster than the industry growth, and same for the new businesses, and investing in distribution or communication and influencers. So in that context, how should we see our profitability? Because on the other side, the expectation is that the RM prices are softening. So to boost the growth, so I mean, in the balance between growth and margin, with the falling RM prices, should we improve on a trend basis, improving margins from here? And this is barring the seasonality Q-on-Q movements. So I'm saying that as a trend line, should we improvement in the margins, or as we are investing in future growth, we should see some softness in the margin?
So I think this question I tried to answer earlier also. So what we are working upon is that how do we make our margins better in the areas where the margins are lower. When inflation is there, how do we take more price increase? And also, we are conscious of our strategy, and therefore, that when margins are improved, some of the investments, will happen. So we are going to balance it out, and please make the assessment that margins in that direction. But I think if we don't invest in the business, further invest in the business, then the margins would be better. But if we continue to the investment, then it may be remain in the same area or plus minus few.
Okay.
I hope I've answered your question. Thank you.
Yeah, sure. Noted. Thanks a lot. Thank you. Thanks a lot.
Thank you very much. I now hand the conference over to Mr. Aniruddha Joshi for closing comments.
Yeah, thanks.
Aniruddha, sorry, but there's a bit of disturbance coming from your line.
Yeah, thanks, Nirav. On behalf of ICICI Securities, we thank the entire management team of Kansai Nerolac Paints for the wonderful discussion. And now I hand over the call to the management for the closing comments. Thanks and over to you, sir.
Thank you everyone for attending this call, and it was very happy to discuss the matter with you, and always your questions are most welcome and they give us some good insights. So thank you for so much. And I want to comment again, on Kansai Paint Japan, we are getting a very good support and help from them. We are working with the good collaboration, and in terms of the technology, the new product trend, the strategy, a lot of work is happening together, and I hope that we see a better and brighter future. Thank you, all of you, to attend this call.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining. You may now disconnect.